Hi, I'm Joel Perry with Nexa Mortgage. Before becoming a loan officer, I spent over a decade in underwriting, actually deciding whether loans were approved or denied. Where most MLOs only see their section of the transaction, my background lets me see the entire picture. This series is built for first-time homebuyers or anyone who wants to brush up on the basics, allowing you to navigate the home loan process with confidence. By the time we're done, you'll walk away smarter than most loan officers. Before we dive into the application, let's go over some common terms and acronyms. If this is your first time through the process, some of this can sound like another language. First up, we have the DTI, debt to income ratio. How much of your monthly income goes towards monthly debts? Pretty straightforward. PITI is your housing payment, principal, interest, taxes, and insurance. This is your full monthly mortgage payment, not just the loan portion. PITIA includes the homeowners association dues when applicable. The MLO, mortgage loan officer, that's me, your guide through the loan process. REO, real estate owned, any properties you currently own in your personal name. This is going to include vacant land and other properties. HOA, homeowners association, monthly dues required by most communities. The escrow agent, the neutral third party who holds funds and manages documents between buyer and seller. The processor, the team member who organizes your file before it goes to underwriting. The underwriter, the person who reviews your file and determines if it meets lending guidelines. Don't let this be confused with a title underwriter who reviews the property's title, not your loan. The title report. This shows who owns the property, any liens, and what must be cleared to close. The appraisal. This determines the market value of the home to make sure the loan-to-value policy is met. LTV, loan-to-value ratio, your loan amount compared to the lower of the sales price or the appraised value. COE is a certificate of eligibility for VA loans, but it's also the close of escrow on most loans. The escrow account holds part of your mortgage payment to pay taxes and insurance when due. This is not always applicable. Now let's break down the application. Today's topic, the 1003, also known as the Uniform Residential Loan Application. This is the foundation of your entire loan. And how you fill it out matters more than you think. Lenders use it as a roadmap. If the information is incomplete or inaccurate, it can delay your closing, confuse the underwriter, and create unnecessary document requests. So let's go step by step through this application. Section 1A, borrower information. You're going to want to use your full legal name here. You're also going to include any alternate names like a maiden name or a nickname. So if you use Rob or Bob for Robert, those go here. This helps align your credit report and title report with what you're providing. Your marital status matters, especially in community property states where a spouse may need to sign documents even if not on the loan. We also need a full 2-year address history. Include every move, no matter how small you think it is. Be accurate about the rent or mortgage amounts. These are going to be critical. Section 1B, now we're getting into your employment and income. We're looking for a 24-month history. List your employer's name, start dates, and position. The start date is absolutely critical for calculating the income. Time in the profession is also important, especially if you've had job changes. It helps show stability. Income is broken into categories: base pay, overtime, bonus, commission, military entitlements, and others. If you own the company, this is where you're going to disclose your ownership percentage. If you're unsure of how much you own, check your K-1 or talk to your CPA. 1E, other income. This is include retirement, public assistance, alimony, and child support. But your loan officer legally cannot ask about those last three. If you want those to be counted, you must bring them up. Pension and retirement income can be asked about. If your DTI increased, they might ask you if you have these sources. And another important note is rental income does not go here. This is going to be listed in the REO, real estate owned. Section 2A and 2B is for assets. 2A is your regular bank accounts, and 2B is other sources like proceeds from the sale of a property or secured borrowed funds. Only list the accounts used for this transaction. Down payment, closing costs, or required reserves are all you want to cover. Have $200,000 in 2 accounts, but only using $100,000? Only list the $100K you need. Extra accounts mean extra documentation. Section 2C and 2D are for liabilities. 2C is your traditional debt, and 2D is other like alimony and child support payments. List all debts: credit cards, auto loans, student loans, co-signed accounts. It doesn't have to be on your credit report. Some debts can be excluded. We'll talk more about that in another episode. Section 3A is for your real estate owned. List all real estate in your personal name. That includes primary, secondary, rentals, investments, commercial, or vacant land. You'll need to provide property address, occupancy type, current value, and monthly payment. The payment includes your PITIA, principal, interest, taxes, insurance, and HOA dues if applicable. Even if the home is paid off, taxes and insurance still count, and you need to show proof the home is free and clear. Section 4A is where you list the subject property and the loan information. 4B is going to be for your secondary financing if you're taking out a HELOC at the same time. And 4C is your property you intend to buy will be income producing. So if you're going to get rental income, this is where you'd put it. And finally, 4D is how you would list any gifts, grants, and gifts of equity. Really awesome ways for down payment we'll talk about another time. Section 5A is your declarations. Yes or no questions on legal and financial history. Bankruptcies, lawsuits, foreclosure, new credit. Be honest, everything is verified. If you say no, but have a bankruptcy, it will be found. Section 6 is acknowledgments, certifying the info is accurate. Section 7D, this is demographics and military info. This section is optional. It doesn't affect your qualification. It's for fair lending compliance only. So some final thoughts here. The 1003 is more than a form. If you fill it out properly, you'll have a cleaner file, a faster process, and fewer surprises. I walk through this with every client, step by step, to make sure we have all of the information. It's where a clean loan starts. Next time, we'll cover credit. What matters? What scores matter? What underwriters look for? And how to avoid traps that delay approval. Hit subscribe and follow along to catch up on the next episode. Let's make today worth remembering.